Hello, everyone. Welcome back to another episode of Palisade Radio. I'm your host, Tom Bodrovics, and Justin Smyth is joining me today from nextbigtrade.com. How are you today, Justin?
Great, Tom. Thanks for having me back on the show.
Absolutely. A lot of things have changed since the last time we had you on the show, and the crazy part was it wasn't that long ago. I figured we could start by asking if you could give us an overview on your stage analysis system and why it works so well.
Yeah, so stage analysis is a chart-based approach that I use to analyze the markets. Actually, from a lot of trial and error and reading a lot of different books, I came to the system because at the end of the day, price action is really what you're trading in the market. And a stage analysis is a pretty simple system. It uses the 30-week moving average as the basis to understand whether a market is in an uptrend or a downtrend. So after reading Stan's book and looking at a lot of charts, I came to the conclusion that the system was pretty effective at understanding different markets. And really what I do in my analysis is I pour through a lot of different asset classes when I'm going over my charts and try to understand, where the strength is in the market, where the weakness is. And I want to focus my trading on, obviously, the strength. The other component to stage analysis that's important is volume, because volume gives you an understanding of what the big money is doing in the markets. The financial institutions are really what drive uptrends in the markets because they're there to buy dips when assets are going up and provide support. So when you see a stage 2 breakout in an asset class, I think it gives you a more certain signal that a market is now going to be moving into an uptrend, and that gives you more confidence to enter that market and trade it from the long side and hopefully get in very early in the upcycle.
We were speaking before the call about possibly even taking the identifying tickers off your charts so that you could be agnostic and have no bias towards the chart as you're analyzing it. Do you think that could be a good idea?
Yeah, it's actually something I've seen other traders do on Twitter, and it's something that I might start doing because even a ticker symbol can give you a little bit of bias on a stock, especially if you're very familiar with the company or maybe even the financials of the stock. And when you're trying to do the chart analysis, ideally what you'd want to do is have no bias coming into looking at the chart. So that's a good idea to potentially, not look at the symbol or even remove it and just kind of at least look at the chart at first from a chart only basis to understand, what stage the market is in and whether it's at a good buy point or not.
So using the 30-week moving average and just following general trends, you're never necessarily going to pick the exact bottom, but it seems like a little bit safer way to enter the markets, correct?
Yeah, you definitely are not looking to catch the bottom, because the problem with bottoms is they can go on for a long period of time, a lot longer than people expect. And it's not really necessary to catch the bottom to capture a big gain, because that's only like the initial part of the gain is the move back above the moving average. Like when something's in an uptrend, it's typically making new highs for weeks to months on end, maybe even years before it tops out and moves back lower again. So it's not really necessary to catch the bottom, and it just gives you a little bit of cushion that you're actually buying something that's in an uptrend at that point and that has a higher likelihood of continuing higher. So that's the idea with stage analysis. It's really avoid looking at things that are making new lows and focus more on strength. The other thing that you do is you look at the relative strength against the S&P 500 or against like the major index of whatever country you live in. And once you see it outperforming the index, that's another sign that stock or fund or ETF is actually leading the market and not lagging, which is important because that tells you like the money is going in that direction versus coming out.
So where are some real bright spots in your analysis right now? Some real good performers?
Well, let's go back to June of 2019. So gold broke out into stage 2 back in June 2019. I actually did a video on my website called "Is Gold the Surprise Bull Market for 2019?" So we got a breakout on volume. Gold went up for a couple months into early September of last year. And then what happened was stocks kind of took back over. And for the rest of the year, the stock market was actually the kind of leading sector in the market. And one of the big movers was Tesla at the end of the year last year. And I talked about that stock a little bit, I think, in my previous interview with you guys. But then obviously early this year, different things were happening. But then the big thing this year that's happened is the coronavirus panic that started at the end of February. And gold actually initially started making new highs when the panic started. Then it fell back below the 13-week moving average briefly. But another key signal for me, which I put out another update on my website about gold, I think it was on March 29th. And what caught my eye was the move back above the 30-week moving average on big volume in gold. And gold went up for 2 days over $100 pretty dramatically, like a big sign of strength there. And this was while the gold stocks were still, very beat up from the panic. And I put out some, tweets on Twitter too, talking about, well, the gold stocks might have a monster rally now because they're always driven by the price of gold. And that's actually what's happened is since gold firmed up, the gold stocks have taken off, and the relative strength against the S&P 500 exploded higher too in gold during that same time frame. So that was a sign to me that gold was now leading the market. And it's kind of continued like this week. One of the important, we're talking on April 24th. One of the important things that's happened is GDX finally broke above 31, which has been that it's been consolidating since September, just like gold. And we're finally getting a breakout there. So gold is definitely leading the markets right now. The other sector, well, there's other sectors that are doing well, but technology is definitely leading the market again. The QQQ ETF is what I'm looking at to kind of a gauge for the overall market too. And QQQ is back above the 30-week moving average. So I'm actually bullish on stocks as long as QQQ is above 195, because that's where
stocks in general or tech stocks.
Stocks, I think in general, but specifically tech stocks. I think there's definitely a lot of weakness in the market. I think financials, airlines are a couple of sectors that are still closer to lows, but you don't really have many stocks making new lows right now. So as long as like the overall market holds up and you don't get a lot of new lows happening, I think the market has a chance to continue to consolidate here and potentially and continue back into an uptrend that it was in before the coronavirus panic. There's other subsectors like biotech, I think, is leading the market right now too. So you've got a kind of a wide array of markets that are leading right now. But I would say that gold, technology, and biotech are three of the top ones.
Excellent. Going back to GDX for a second, you were saying that you're on the lookout for another wave of setups. What are some of the other factors that you're going to look at to decide to get into that trade?
Really the same kind of conditions that if you go on my website on the stage analysis page that talks about what you want to look for in a stage 2 breakout. So you want to see a stock breaking above the 30-week moving average on a big increase in volume. You want to look for stocks that have the least amount of overhead resistance. So what that means is if they have any previous price action that's above the current price, that would be overhead resistance. So a good example would be like the breakouts that occurred in like Newmont Mining and Barrick Gold and Franco-Nevada are like three like the leading gold stocks right now. Like they had the least amount of overhead resistance because they fell the least after the coronavirus panic. So they've been leading first, but the next wave of setups would be the stocks that have moved back to close to their former highs, but are ready to break out above that resistance level and start making new highs. So I'd be looking for gold stocks that are set up that way. You want to avoid the stocks that are still very beat down and, even like making new lows. That could be a sign of weakness. So you want to avoid that and focus on like the next wave of setups. Typically what happens in a gold bull market is the majors lead first because they're the most liquid, and then it just kind of moves down the food chain as the bull market goes on, and you get down to the juniors, which make big moves like towards the end of the bull market. So I'm sure if this thing keeps going, if gold gets above $2,000 an ounce, then you'll see more juniors breaking out and other stocks that haven't moved yet.
Are you looking at any juniors in specific?
I was pretty keen on the palladium juniors before the coronavirus panic, just because palladium was leading so strongly. Palladium still is back above the 30-week, but it's close to it right now. So it's not clear exactly what's going on with palladium, but I think it's still in an uptrend. So I'm still kind of looking at those stocks because there's so few of them. And I think that due to that fact, if they start moving again, they could be big winners. Really, it would just depend on looking at the charts. I'd probably have to, I scan through a lot of charts on a weekly basis. So I'd continually go through those and see where the setups are at with the gold juniors. Like what happens is the ones that have already ran kind of get tired and they stop moving higher because they've had big moves and people start taking profits. And then what the ones that haven't broke out yet become like the next leadership because the money rotates into them and they start moving higher. So it's kind of a continual thing where you just keep going back through the charts and see if you can find the best setups.
So speaking about a setup, moving on to uranium, we've seen a big spike in the price recently. How are you looking at that to play?
Yeah, uranium's been interesting because in 2019, uranium was actually back in a downtrend while the rest of the market was moving higher. And then in the last few weeks, you've seen this massive move higher on a big increase in volume too in a lot of different uranium stocks, to where I think most of the uranium stocks are now back above the 30-week moving average. And the price of uranium, I think, is around $35 a pound. I would say from a stage analysis perspective, the one thing I don't like about what's happened is it's been like a V bounce off of the bottom. And I think those are more prone to fail than when you have a stage one base, because the stage one base indicates that the selling pressure has basically gone away and you're just looking for the buying pressure to really start a new uptrend, where when you have a V bounce, like you previously, I had a bunch of selling pressure causing the downtrend, and now it's all of a sudden overridden by a bunch of buying pressure. So it's kind of unclear whether this was more of a short-term momentum move or whether it's really a new uptrend. I would say that as long as the uranium stocks don't fall back below the 30-week, then they have a chance of being in an uptrend. And especially if you continue to see the volume come into these stocks. I mean, obviously they're beaten down, so it doesn't take a lot of buying pressure to move them higher. One thing that could also happen is after this kind of a sharp move, maybe you'll see consolidation, set up a little bit more of a base, and then they break out again. I think that would be a really good sign for the uranium stocks. So I'm personally not in them quite yet, but I'm going to be watching them to see if something like that happens. And you can use the 30-week moving average as your backstop. So if they're just above it right now, you really have a pretty good risk reward setup because they're not far from like where your stop loss would be. So again, like the charts aren't as good as like what I've seen in gold last year, or even in cannabis in 2017 and 18. You had a lot of nice bases that the stocks broke out from. The volume looks pretty good in uranium, so I guess we'll just see what happens. But, uranium stocks have been in a bear market for many, many years. Typically, the longer something's in a bear market, the more likely that it's eventually going to emerge into an upcycle. Uranium definitely has that going for it right now.
Absolutely. Is there a way to play, let's say, a basket of uranium stocks, almost like an ETF, or do you just play them individually?
That's an interesting question, because the only uranium ETF that I know of is URA, and I think the stocks that are part of that ETF aren't always some of the main symbols that you might be familiar with from the major uranium miners. I think there's a lot of maybe private sector companies and even like utility operators that are part of that ETF. I'm not sure that's the best way to play uranium. I typically just look at the stocks, especially Cameco and Denison, I think are two of the main ones. So yeah, I think the uranium ETF really isn't the best proxy, in my opinion, for uranium miners. The other ETF that I look at is the Uranium Participation Corporation. I think that one tracks the spot price of uranium fairly well. I use stockcharts.com, and unfortunately they don't have a uranium spot price, but they have the Uranium Participation Corporation symbol.
Perfect. Anything else you'd like to touch on to share with our listeners before we wrap up?
Yeah, I definitely would say if you're interested in stage analysis, check out my website at nextbigtrade.com. I post articles on pretty much a weekly basis talking about different parts of the market, education on stage analysis too. I've got a page on my website that describes the system if you want to get more in depth. And I've got kind of a book review of Stan Weinstein's book. And then I also have a YouTube channel where I post videos on the markets too. So different ways to check out my content.
Perfect. And you're also Next Big Trade on Twitter as well.
Yeah, Next Big Trade on Twitter.
Excellent. Thanks for your time today, Justin.
Thanks, Tom.
As always, if anybody has any questions, please let me know at tom@palisaderadio.com.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?